Last week, the ECB hinted at what it will take to get them to start buying bonds again. Joining me now to discuss the latest from the debt crisis is Chris Walker, FX strategist at UBS in London. Chris, nice to have you with us. So when do you think markets are now holding out for greater ECB intervention? And also, are you even in favour of the controversial task of the ECB buying bonds?
I think the initial reaction from markets was slightly mixed, although probably skewed towards a more favourable reaction. And although details are not particularly clear at the moment, we think it's probably a case of further action from the ECB down the line. But there are a lot of conditionalities attached to that. It's pretty clear that Draghi was saying that he's willing to perhaps conduct a new program which will tackle fixed income markets perhaps at the front end of the curves rather than on the 10 years. But that is provided that the respective states, i.e. Spain, go to the FSF and get a formal bailout first. So it's clear that they've pushed the ball into Spain's courts, and what is now seeming inevitable is that Spain will have to go and apply for a bailout. And once that is achieved, then they can start to intervene in the markets again.
Well, the focus, as you say, is again primarily on Spain and Italy, and as to when and whether they will ask for help. What's your verdict on the situation of these two countries right now?
I think it's really just fighting the inevitable. We've been calling for the last sort of 6 months that they will have to go for a formal bailout because the debt metrics don't really allow it to be sustainable at current levels, and the market is showing that even though we have seen some reforms on the fiscal side from Rajoy's administration, they've not been deep enough, and it's not come in conjunction with a growth mandate as well. So if we do provide a formal bailout, then perhaps the markets will give them the benefit of the doubt after that, and then if that does provide the green light for further intervention action from the ECB, then it puts them back on a sustainable path.
But the problem here is the rescue funds are too small to cover Spain's full funding needs for more than 3 years, let alone Italy's. So surely we're still stuck in the same dilemma and rut.
They are, if you assume that the only source of funding will come from these channels, but as we've sort of hinted, the ECB might actually do a bit of the work themselves. Now, I'm not suggesting they're going to start monetizing debt, of course not, but their mandate is to restore orderly markets, and in the front end of the curves, it's pretty clear that the markets are pricing in some convertibility risk, and the rates markets have become completely disorderly. So even though we don't know what sides they can intervene on, if they start to tackle the front end of the curves, and inevitably the curves will start to flatten as a consequence, and the 10-year yields will inevitably come down as a factor of that. So even though it's not, of course, by any means monetary financing of debt, and Draghi is pretty keen to stress that, which is why he's put the conditionality on Spain applying for a bailout first. It's still going to help on the margin.
Well, euro weakness across the board is still the general forecast going forward. What are your specific forecasts at UBS in the short, mid and long term for the euro? And what currencies do you see it taking the biggest tumble against?
Yeah, we still look for broad euro weakness in the second half of this year. There are many drivers behind that, whether it's a debasement argument if we do get explicit ECB interventions in the markets, which might not even be sterilised, or whether it's a sort of sovereign and credit risk attached to holding euros at the moment. In the short term, because these expectations that Spain may actually go for a bailout, the ECB will sort of respond towards that, means that we could see a risk squeeze higher. We actually took profit on our euro-yen put spread trade idea last week, so we do think in the short term that we might get a squeeze higher, but over the longer term we still remain short euros versus various sort of 3 to 6 month structures. So in terms of euro dollar, we're looking for 120 in the next few months or so, but in the short term some of the more risky crosses like euro yen, for example, might start to push higher a little bit before again continue on the downtrend which we've seen established for much of this year.
Finally, Chris, negotiations between Greece and its lenders are still in progress in order to keep the international rescue funds flowing. How do you feel in regards to Greece and its future in the currency bloc?
Yeah, this is probably the next focus for markets. It's pretty clear, at least in FX markets at the moment, that investors are only willing to focus on one element at a time. So, of course, that's been Spain for the last couple of months. But at the meantime, it's clear that Greece is falling back on its payments. It's probably necessary they're going to have a bridge loan from the Troika once again. And whether that will happen is a tough question at the moment. So it's going to come a point when we realise that we're going to have another restructuring of Greece's debt, and the political problems inside of Greece are going to resurface once again. That's sort of been pushed back for another couple of months after we had the elections earlier this year, but again it can resurface towards the autumn when politicians come back from the holidays. So it's definitely an event risk sort of worth flagging down the line, and it's clear that volatility should probably increase in the next couple of months as a consequence of that. Our core view remains that we don't think Greece is going to leave the euro. It's the costs associated for both Greece and the credit countries in the rest of Europe are simply too high at the moment. But that's not to say it can't happen. Of course, it could be some sort of tail risk events and accidents such as bank runs which can actually prompt it to happen. But we just don't sort of see that as our base case at the moment.
Chris Walker there from UBS on the Eurozone developments in the Eurozone debt crisis. Now, for more exclusive interviews, news and updates, stay tuned to Dukascopy TV. But for the moment, goodbye.